Good evening. This is Tom Alexander. It is Wednesday, June 5th. It is about 7:45 p.m. Eastern Time in beautiful Charleston, South Carolina. This is a special midweek update. In light of the latest and greatest ramp in the SPX and NDX, I thought I would do a free update, updating basically the weekend report. Now I do a nightly report for subscribers every evening. This is for everybody. If you like this, please like it, subscribe. If you are not on my mailing list, send me an email to tom@alexandertrading.com. I'll put you on the list. You'll get all my free stuff. I don't sell lists, etc. Okay, today we had a pretty strong move in the SPX and NDX, and we have closed now at new all-time highs in the NDX and SPX. And the ESDNQ, new contract highs. Now, there's some cracks in the dam, though. This could be very bullish, but there are certain things that have to happen for it to resolve as bullish as today appears to have been. Let's take a look at the charts here. Okay, as most of you know, I don't use indicators, oscillators, magic numbers of any kind. I am an auction market trader. I simply look at price action, and when I am analyzing stock indices, I look across the spectrum of the stock indices. There are many. I closely follow 4 or 5 of the larger ones. And let's start with the SPX and the NDX. Okay, let's just take a look at the SPX. So we had a gap up this morning. Whatever the latest and greatest economic number was at 8:30, kicked the thing off, and we gapped up, traded down for a few minutes, and then at 10 o'clock went dead vertical, almost dead vertical all day long. Closed on the highs, and actually in futures trading Globex, we're still making higher highs slightly. So bottom line here is, what is the most important level? Well, the most important level is today's cash session lows in all of the indices. If this is a kickoff, if this the closing in new all-time highs in the SPX and NDX is meaningful, and it is a kickoff, and we're going to run another 2, 3, 4% higher before we have a crash of 10 handles, then today's lows in the primary indices, the indices that I'm going to show you, all should hold. Now, could we get some back and fill into this range? Of course, but you do not want to see closes below today's cash session lows by the indices. If you see closes by any of the indices below today's low, that's a heads up, and it merits paying attention. So you may say, okay, well, what's the target to the upside? Well, there is a target to the upside. I'm not in the magic number crowd. I don't do fib projections, Gann lines, all this other stuff. There is nothing above present levels from an objective perspective that could be potential quote unquote resistance. I only look at previous trade levels, actual trading between buyers and sellers, when I'm analyzing a market to determine what is an inflection point and what could be resistance. Well, there is no trade above where we close in the cash markets today. Therefore, there is no resistance. Okay, the NDX / NVIDIA. Okay, so NVIDIA was up again, of course, and the NDX is going straight up, but it's as simple as this. There's no resistance above where we are. Today's cash session lows are what are important. Now, if the rest of the market were even close to new highs or new pivot highs, this would be unequivocally bullish. But there is a but here. Let's start by looking at the Dow. So the Dow had this big drop. And I understand there are different components in the indices, but trust me, I've been doing this for almost 40 years. If you go back and you look at any bull market, the indices, the primary indices will generally move in lockstep. And when you have a divergence that is this wide, when you have one or more actually, making new all-time highs and the others lagging, especially to the degree that the Dow, the New York Composite, which I'll show in a minute, and the Russell, which I'll show in a minute, it's a fly in the ointment. It's a fly in the bullish ointment. So let's take a look here just for fun. This is where we closed to print to a new all-time high. We'd have to trade about 3% higher. Now, could we do that? Yeah, we could do that over the next, I guess, 2 or 3 days. And if we were to do that, that would be extraordinarily continued bullish in the SPX, the NDX. The SPX and NDX are not going to crater if the Dow is going straight up. On the other hand, if the Dow over the next 2 or 3 days continues to show weakness and we don't see any strength in the Dow, it continues to be a heads up. It continues to be a warning that the SPX and the NDX at a minimum have gotten ahead of themselves, and you've got to watch out. And we're in the musical chairs phase of that particular rally. Let's take a look at the Russell. And the Russell, the Russell has a long way to go just to get to the high back in May, much less the year high. And this is not the all-time high, unless the SPX and NDX are going to double from here. I don't think we're going to see the Russell. I'll just show you where the Russell high is. If you look on the weekly chart, here's the Russell high way up here. This was back in late 2021 when the Russell made its high, and that is about 17% away. So it would be quite bullish if the Russell were to approach that level, but I don't expect to see that anytime soon. Just to show you how much of a divergence there is between the Russell and the rest of the market. Now, the New York Composite, which is all the stocks listed on the New York Stock Exchange, it had been pretty much confirming the rally. It made a new high about the same time as everything else did back in mid-May. Then we had the drop. It was a little bit deeper than we saw in the SPX and NDX, and since then recovery has been rather tepid. It is also currently about 2% from its all-time high. So the bottom line here is that there was tremendous buying. It was relentlessly bid, the SPX and NDX, all day long. That's great. That's a lot of upside momentum. It will probably continue. However, it bears monitoring what is going on with the New York Composite, the Russell, and the Dow. Now, another look at this. Now, I can make a bullish case. I can make a bearish case out of this chart. What you see here is NYSE data. This is the red line the red line is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of advancing issues, and the blue histogram is breadth. Breadth was positive today, but not exactly rippingly so. It was plus 917. Now, I posted this on the website a week or two ago. Let me show you that real quickly. If you go to alexandertrading.com, you click on weekly update, you can go back and you can look at the weekend updates. This is from last weekend. I post comments, charts, also do a video there. You can find them here, but this will give you the past information, and you can see where I've been leading up to and see how see the coherence or lack thereof in the work that I'm doing, and see if it's of value to you. Okay, so bottom line here is that the 10-day moving average of advancing issues tends to correlate. Now, this is a much more valuable tool in declines than it is in advances. It's much more valuable in bear markets than it is in bull markets. But whether the decline is in a bull market or a bear market, it is quite often very valuable in helping to identify important pivot lows, even in bull trends. Not so much to the upside, but that's another story. You can find information about that on the website in past weekend updates. But if you look, when we have reached this level that we're coming off of here in this 10-day moving average of advancing issues, we've had really strong rallies, and that's pretty consistently the case. You can see two levels here. This is an upper level. Obviously, it's hit more often, but even this level, when it's hit, tends to generate strong rallies, and quite often very strong rallies. So this is the most bullish additional information besides the price action in the SPX and the NDX, the fact that you have the 10-day moving average of advancing issues at such a compressed level. Now, you could take the other side of that and say, well, gee, Tom, that's a divergence. It's weak. Could be. Again, I don't know, but I do know that it correlates. This level tends to correlate with lows. So if we're going to see a move higher in the 10-day moving average of advancing issues, even if it gets back up into here somewhere like this, before it rolls over again to one degree or another, the SPX could be up substantially. Not a prediction. I don't do predictions. But I will leave you with this. I want to reiterate, there is nothing above present levels. The market should go higher to one degree or another in all the indices. The Dow, the New York Composite, and the Russell need to begin to participate more if this is going to have legs. And the level to watch to the downside are today's cash session lows. A close below today's cash session lows by any of the indices is a real heads up and a real warning not to press this rally too much. You guys have a good evening. I'll speak with you again soon.